All right, good morning. Good morning, let's get this going. There's your attendees, how close up? All right, we don't need checks laying out. Okay, come on. So far, 2 attendees, we'll wait a little bit, have a little bit more, why not? I haven't even got a chance to put my computers on because I've been so behind today. But we could wait for everyone to join because we're just that nice of people, you know? But I'm not gonna wait long because if people don't want to be a participant at 10 o'clock, then that's okay. They could do whatever they like. All right, I'm seeing some people come in. Just to let you know, guys, to be on time, I haven't even used the bathroom yet. So when I see people late, it just kind of rubs me the wrong way, but that's okay. We'll get through it together. So come on. All right. We got a good number of people in here. Hey, Ron, good morning. So we'll start with who we have because you guys are important. Everyone else that's late is a little bit less important. And if they have a problem with that, that's okay. All right, so totally cool. So we said we were going to go ahead and start today with a long-term approach. Like if you were going to create a portfolio today and you were coming up with 5 or 10 stocks, which would they be? Now, I decided, well, there's 5 days in a week. Let's do 1 per day and let's just pick the 5 best, right? So today we'll go ahead and get to the one that we want to introduce today. It's one that everyone's heard me speak of before, but I honestly think that if there was one stock that I was going to own for the entire rest of the 10, 20, 30 years ahead of us, there is a very obvious choice. And we will share that with you in a couple of minutes. In fact, today it's now 10:02. If I could get done by 10:40, I'd be so happy. I can't even tell you what my day looks like. And actually, as I was driving to work, it got shorter because people that are responsible for some things in my day, can't calculate. And that's fine. We take it as we go. So I don't know where the market is today. I do know, as I posted earlier, that our Etsy 150 calls are already gone. Now, if you remember, Apple reported earnings Thursday evening. And Apple gave us a bit of a fit last week, right? So the Apple calls that we purchased Monday got sold Tuesday up 50%. But the Apple calls we bought Friday, we ended up losing, I think, 50% on them because we sold them. Now, that's a misleading number because remember, when we purchased Apple calls last Friday, we said, this is our initial position. If it comes down, we will buy more. But because it came down, we said, well, we're not going to buy the same calls because the stock's lower, which means we could get a lower strike. Remember, the strike price is the price that you're betting on. You're betting by that this stock is going to be this price by this date. Therefore, if you have we'll use Apple for an example, right? So if you're purchasing, what do we have? $160 calls and the stock's 155, okay, great, it's 5 points away. You can make up that 5 points. That 5 points is investable. All right, it's only 5 points away. What do we got to do to get there, right? But if the stock pulls back to say 150, now you're 10 points away. So that second half of money that you had that you said you were going to put back into that position, if it came down, because again, you bought it responsibly. I'm buying some here, and if it comes down, I'll buy some more. Well, do you then go ahead and buy those 160s again? Because now they're 10 points out of the money. The risk reward to reach them is not as high as it once was when the stock was 155. It was only 5 points out of the money. But the market compensates for that, right? Those 160s were a lot of money. Now they're less than a lot of money. But do you want to do that? Do you want to throw money into that one, knowing that it's 10 points away? The knowing that you purchase those calls because you believe you can make up a 5 point difference. Just because now it's down 5 points and there's a 10 point difference does not mean you have to put your head in the ground and say, let's throw away why I bought this and now I'm going to make up a 10 point difference. Just because most people always feel they want to buy the same thing because it lowers their cost, and then they feel like, okay, I was down 50%, now I'm only down 25%. Because if you're down, say you're down 50% and you buy more there, now you're down only 25% if you bought an equal amount, right? Right. So what do? We said, well, we're not going to buy the 160s again. We'll buy the 155s. Why not? In fact, I think we bought the 150s because the stock was really far down. Well, what ended up happening was those got sold immediately. They got sold the next day. They were profitable. They were 48% by the next morning. Really super cool. Now that 48% gain, do we say that happened in a vacuum, or do we say that offsets the 40% loss we lost in the Friday ones? Because if not for the Friday ones, if not for that first position going in, then you would have never had the opportunity to have the second position. Hey, said good morning, which means, yeah, said I will explain that. And actually, you're picking a great time to X that because Etsy just got sold this morning. Again, we didn't lose. Well, at least that streak is continuing, right? But I will get to that, I promise you, because we'll pull up the charts and figure out where the stock market is. No big deal. So the long and short is the money that we lost on those initial calls that we sold in Apple at a loss Thursday, 3:57 p.m. is offset by the money that was made by purchasing the 150s on Monday that we sold Tuesday. They're up 48%, right? Now, it wasn't a perfect offset because the larger position was bought Friday and the smaller position was bought Monday. But overall, I would say we probably lost 20 to 25% in Apple. Not good, right? Oh, darn. But if you remember, even more so, did we buy the other half Monday or did we buy a quarter Monday? We bought only a quarter. Meaning we always had more money to buy more stuff because we said, we don't know the date this is going to stop, but we know we want to buy every day this goes down because we believe it's getting close to the bottom. It's getting close to just being fully exhausted. Like enough's enough. We know the circus is in town for private companies. We know people want to put money into stocks because anyone that thinks that they're going to put money in the government and ever get that money back with any purchasing power is actually certifiably insane. Like that person never went to math class, never went to school, and should actually be like taken out somewhere and thrown off a bridge because they only can hurt themselves and their family by buying government bonds. Therefore, to go ahead and to exercise them from the world actually would probably be a good thing for other people, right? So we said, okay, well, money managers aren't going to do that. So they're going to go into stocks, meaning if they're going to go into stocks and everyone understands stocks and companies have balance sheets and they're pristine and that they are able to offset inflation because the companies do business in the currency and they don't have debt like the government, then this is where they want to be, which means now it just comes down to point. Where is the point that someone gets in? Where do you buy it? If you know, it's like the NFL draft, right? So sometimes there's a team like the New York Giants that like a quarterback named Daniel Jones. Now, Daniel Jones, according to all the other teams, was not that good. In fact, he probably would have been around in the second round, but the New York Giants drafted him 6th overall. And people were like, what are you doing? You just wasted a pick on someone that would have been around later. And the New York Giants said, hey, we know that that's the guy we want. No story about it. We want him. Therefore, it does not matter when we go ahead and pick him because the risk we were unwilling to take was losing him. We wanted him at any expense, at any cost. We want him. So they got him. That's what the stock market is. When do the people that say, no, we're going to buy stocks, like our money's only going to stocks, where's the moment where they say, I don't care anymore. I want here. If it goes lower, fine, but I want here. And what we said was we believe that moment to be coming, that we believe that moment to really be showing itself starting last week. And in doing so, we continue to purchase every single day. So of course, if you're the first army man through the cave, you probably get shot, right? Like if you're going to go get Al-Qaeda and they're in this cave and you're the first one through the hole, you're probably not coming out alive. But the bombs that killed you were already detonated on you. Therefore, the second person, the third person, the fourth person could really do some damage. So you're basically like a kamikaze, right? That's what our Apple position was Friday. Now, we don't volunteer kamikazes. We don't buy something saying, oh, God, I hope this goes down. No, but we understand that there is a nature. There's a process to this. Anybody, well, first of all, if you ever believe that you're going to buy a stock and it's never going to go down, shut this off, walk away, right? Like you're not a reasonable adult. You're not allowed in the stock market. I am speaking on behalf of the stock market. If you believe you are never going to lose money, you are not allowed. And obviously I can't do anything about that, but I really feel like, I should be able to say that. Okay, cool. But But if you're in the stock market and you believe that you could close your eyes and throw the money and it's always going to be there, like my wife, right? Anytime she buys something and it goes down, she goes, "Oh, I'm going to leave it. It's got to go back up." And I go, "In what world? Like, who said it has to go back up? Like, where did the rule come that it has to come back up? Do you think the people that own Robinhood believe it has to come back up? Do you believe the people that own GoPro, the people that own Kathy Wood's Ark, do you believe these people like they weren't taught things don't have to go back up? No, you have to know when to take your losses, right? So it's easy to say, all right, yeah, I'm a reasonable adult. Like, I know I'm going to lose money at some point, and I'm okay with that. Like, this is the calculus that I'm doing. Great. But in that moment that you have to take the loss, are you, like, do you have your emotions in check? The moment that you know I have to take this loss because the risk is not worth losing all my money, are you able to do it? And if you remember, and that's what, it's not like I gotta tell you, these 2 weeks have been some of the best content I think has ever, like, honestly, I think that we will repackage this at some point. And this might be a curriculum that universities use, because we've navigated these 2 weeks really, really well. And that's not to say, oh, Anthony, you made $1 bazillion, because that's not the case. In fact, the person that makes $1 bazillion more times than not probably got lucky, because there's no one on God's green earth that can say, okay, I'm going to short it those 2 weeks, the market's going to go down, that one day it goes up, I'm going to buy. That's like hogwash. It doesn't actually exist. But can you make money in a down market on buying stuff that you believe to go up? Like, can you do that? Because if you could do that, you're like pretty super duper duper. And the point that I'm saying about all this, that I was like patting myself on the back, was Thursday we had a real life opportunity that we had to show you. There was a moment that our money was in options that expired the next day that were based on an earnings announcement at the end of that day. And we were down, what, 40, 50%? And it was like, it really isn't fun to go ahead and host a platform where you're going to show the world that you can lose 50% in 2 weeks. Like, what's the point of that? You can spend as much time as you want talking as smartly and as intelligently as you think you are. But at the end of the day, you just look like a fool. You're a really well-spoken fool, but you just lost half your money. So what's the value? But that's where the platform, that's where the experience comes in. All right, guys, this is where we are. You're Patrick Mahomes, down a touchdown, 13 seconds to go, down a field goal, 13 seconds to go. Here's the ball. What are you going to do? You're Matt Stafford against the 49ers last night, down 10 points going into the fourth quarter. No one's ever come back from a 10-point down fourth quarter, down going into the fourth quarter in the championship round ever. What are you going to do? You're Joe Burrow against Patrick Mahomes. What are you going to do? And that's what makes the best ones the best, right? Where you could say, I don't know how they're going to do this, but I know they know what they're doing. And I believe in that person. So what ended up happening? We said, okay, at 3:57 p.m., the stock's at 159. We do not have the stomach to stay in it, because if we decided to stay in it, do not kid yourself, that would have been pure gambling. Because in no world would I know those earnings numbers, nor would I be able to predict how the market would react. I'll tell you this, if Apple gave me the numbers beforehand, that's only half the battle. I don't know how the market would react. In fact, they just produced the best quarter ever in the history of the world. And the stock opened up at 166 and went down to 163, up 3 points on the day. The whole NASDAQ was down. The whole market was down. Yeah, it ran to 170 at the end of the day. But where were you? You got to remember, you got to put yourself in that position. All right, so I own these calls. Now I own the 165s, right? I did, the 165s. Now I remember, because I know the numbers. I own the 165s, okay. Which means it has to be at least 165 for that call to even be worth anything. Because I'm betting that Apple's going to be 165 by this date. Okay. Well, if Apple's 163, what's that call worth? It's worth zero. Because who's going to buy the right from me that they can call away my stock at 165 when the stock's 163? It's like you going to the store and bananas are $1, and someone next to you is like, I'll sell you this coupon. You could buy bananas for $2 with this coupon. And you're like, why would I do that? I could buy them for $1 without that coupon. They're like, yeah, but like, I got the coupon. And you're like, nah, go away. That's options. Those calls, those puts are coupons. Therefore, if I have a 165 coupon and the stock's 163, it's worth 0. So, okay, so the market opens and it goes to 166. All right, so that coupon's worth $1, maybe $1.50 because people are betting on it going up. Now the stock goes to 165. Now the stock goes to 164. Now the stock goes to 163. I now see my account is down 100%, right? What do you do then? What do you do in that moment? What would you do? Well, A, you would say, I'm up for gambling. 2, you might say, I'm never getting on this again. Like, I don't even want to be seen. I just lost 100% of my money in front of people. Or 3, you say, you know what? I'm done. I'm shutting all this down. I'm going away. I don't want to know nothing about nothing. I'm going to the bar. I'm getting a drink. Those are your 3 options, right? Like, what are you going to do? And at the end of the day, the stock then ran to 170. So if I did that and went off to the bar and had a drink, I'd look like I'd be able to come on and look like a superhero. I'd be like, yeah, but I had the mental fortitude to hold it because I knew the stock was going to go up. No, I didn't. Nobody knows a stock's going to go up 10 points by the end of the day. You don't know. Therefore, every situation that could have happened from me holding those calls overnight would have been gambling, which is not investing. Gambling and investing are different. Like they said in the movie 21, we are not playing blackjack, we're counting cards. There's a difference. So what did we do? Because our rationale wasn't incorrect. Our thesis wasn't incorrect. We said we believe Apple's going to show great numbers, and we believe on the backs of those numbers, the rest of the market was going to have a relief rally, that the things that people feared, the worst is behind them. And why do we believe that? We saw IBM numbers, we saw Microsoft numbers, we saw market reactions, we saw bottoms, we saw testing of bottoms, we saw intraday reversals, we saw the market getting shorter when it was supposed. We saw everything we needed to see to make that call. So how do we go ahead and demonstrate? How do we represent? How do we invest along that thesis without gambling? That was the question, right? How do we do that? Well, you have to take a step back and stop thinking emotionally. Okay, what was our thesis? That we believe that as demonstrated by Apple numbers, that the NASDAQ would have an all clear sign for a short term, at the very least, relief rally, and that the Apple numbers were going to be so good that the NASDAQ was going to go up. Okay, that's what we believed. Well, how do we, all right, so if someone's telling you that they believe the NASDAQ's going to go up because of Apple, does that mean you have to own Apple? It doesn't. It means you could own anything in the NASDAQ. If the NASDAQ's going to go up, then buy something in the NASDAQ. Does it mean that you have to have it expire the next day? No. It means you're not married, you're not held hostage, you don't have shackles on you that says you have to buy something that expires the next day. You're able to buy whatever you want whenever it expires. Oh, all right. I'm feeling a little sexy now. So I could buy anything in the NASDAQ and it could expire anytime I wanted to. Okay. All right. I understand I'm down in Apple and this. So you know what? Let me sell it. Bye, Apple. Peace in the Middle East. Okay. Well, I better hurry. Let me buy something in the NASDAQ and it doesn't have to expire tomorrow. So let me buy it a month out. All right. Etsy was a 22 red and green, to go to what Sid was saying, and we're going to demonstrate this, Sid, so stay with me. It's a 22 red and green. It's in the NASDAQ. Our algorithms are loving it. 22 red and green, as Sid just said, we never lose on a 22 red and green. Well, I don't need to own it for tomorrow. I'll own it for a month out, and I can buy the 150s. This thing was just 170. I can buy the 150s. Done. Bet. Let's do it. Okay. We put our 40% stop in. Blah blah blah. Cool. All right. So what happened? Well, let's go to the tape, right? All right. So let's do a share screen. Where is what I'm looking for? Can you go away, Zoom? Like, nobody's talking to you. All right. All right, we're moving some stuff around. Oh, Susanna, don't you cry for me. All right. So you know what's really cool? And also I want to go ahead and share this because we were there. Do you remember Friday when we pulled up the chart and said, this is interesting. This is the first time the NASDAQ is outperforming the market, that the NASDAQ was down 16%, the market was down 9%. But Friday, we saw that the NASDAQ started outperforming. We pulled it up on in charge right in front of it. And sorry for cursing, I'm just a little volatile lately. And that's a story for another day, but I'm not as good as I once was. But that's a story for another day. Take a look at where the market is today. The Dow's up 50. Wake me up when something happens, right? S&P is up 30. Just had the weirdest dream. Look at the NASDAQ, up 239. That's a lot. That's like a lot. So let's see what's going on. Okay. So Etsy, feel a little sexy. Look at Apple, 172. What a gangster. Remember we talked about NVIDIA? Woo, look at Tesla. Oh my God, this is sexy. This is where you just want to get naked and jump into a pool of 4-letter tickers and say, oh my God, Lulu on me, right? Like, let's do it. Look at Lulu, up 11. I'll let anyone Lulu on me today. I'll let you Lulu on me if I can Netflix on you, right? Like, let's do it. So let's take a look at Etsy. 22 red and green, right? Red, green, 22. What do we get to? Well, do you remember when we bought this? This was Thursday. Look at where it closed. So on these bars, the left line, let me just try to make it a little bit bigger for you. I know, now it doesn't want to work for me. Okay, so the left line is where it opens. The right line is where it closes. Let's take a look at Thursday. Do you see that right line? It closed at the lows of the day, which means when we bought it at 357, we bought it right over here. Boom, 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 right? So what's this? 139, what's this? 152. Can I interest you in 12, 13 points in a matter of 2 days? I think I can, fine, sir, why not? Oh, Robbie's like, I got cash on hand. I got cash on hand too, all my stocks got sold. Actually, I think I own a little Etsy still. Let's find out. Because I think only one got sold. I don't know. Let's find out. You know, I know. Oh, why you do this to me? Let's see. So I saw these Etsy calls actually only up 7%. Do you remember how much they were down? Yuck. But today, look at that, days gain realized. We already made $3,000 today. Like, that's pretty cool. So these Etsy calls I still own. They're up 7%. They were really far down. Anyway, I did Apple Strangle, which did well. Of course, Robbie makes money like he owns a printing press. Anyway, but let me get back to SIT for a moment. 22 red and green. Now let me explain what that means. These numbers are a proprietary algorithm that through my experience and blah, 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 I've created, right? It's an exhaustion indicator that I'm not going to tell you how it's made, but if something happens in correlation to something that happened 4 bars prior, that equals a 1. If the next one exhibits the same characteristics, that's a 2. Bop, bop, bop. So if you get to 20, that is like 24 days of something that's been happening. That's really, really rare. So if you get to 22, that's even rarer. Now, that number does not mean anything in a vacuum, because how's the stock reacting? This down here measures short-term exhaustion, like coiled spring, I want to explain it as. The red means it's becoming a coiled spring, which is fine. It means it's really, really becoming compressed very, very strongly, right? But that doesn't mean anything unless people are willing to put money. What's on my nose? Unless people are willing to put money to it. Because a stock could go down every single day and it could be called Enron, right? It could just go to 0. But if money is still coming into it, then that's something pretty cool, right? Like money is coming into it, meaning that the majority, the people that own the world, the people that have all the money believe that it's coming down so precipitously. That's only a stock market event. It's not a company event. The stock is getting hit, but the company's doing fine. Therefore, they're putting money into the company. When you have a coiled spring with a number over 20, with people putting money into it, the belief is when the market just breathes a little bit, boom. Great. So that was pretty cool. So that's been working out pretty well for us. Okay. So that's that. So let me go ahead and share the stock. Well, actually, before we get to that, right? What time is it? It's 10:25. So what's our belief going forward? All right, so let's do some work, right? Like we need to work a little bit. We can't just sit here and look good all day and look all pretty. We have to actually do work, you know? It's not, you know, you can't just be born with good looks and just think you're going to get by. Unless you're really good looking. All right, anyway. But I'm also really smart. Like I spend so much time doing stuff. Why can I not do this? Why every day something has to be different to my life? Okay, anyway, let's go ahead and pull up the VXN. Let's put that in a new pane. Guys, and I gotta tell you, like, what is going on here? Oh, now I can do it. Okay, cool. So before we go any further, how much time have you and I spent watching CNBC on any of these calls? 0. Because CNBC is what we like to call a contrarian indicator. CNBC works on ratings. Therefore, they look to find people's emotions at a really, really high point, and then they vulture, they attack, they savage it, they exploit, and it's disgusting. It's kind of like what politicians do. Oh, that happened. Let's go ahead and round up that community. Let's go ahead and get them hypersensitive, and then let's go ahead and use and abuse them and throw them away when we don't want them. That's what CNBC does to its viewers. Oh, the stock market's going down. All right, everyone come in. Let's talk about how it's going to zero. Let's scare the out of people. They're going to sit here and watch what's going on all day. And like our ratings will be up. We'll go ahead and charge higher for TV commercial times. But at the same time, we're not idiots. So we go ahead and talk to the hedge funds and the pension funds, and they see that the market's coming down. And they're able to say, oh, wow, you really scared everyone. What's your viewer ratings? If you don't think a hedge fund knows the viewer ratings of CNBC, you're out of your mind. When that viewer ratings tops, like for instance, 20 million people are watching on this day, the hedge funds know, whoa, everyone's scared. Everyone's scared. Therefore, once they see the next day that those viewer ratings go down to 19 million, they're like, okay, people are less scared. That data is worth a lot to us because that data precedes even the VIX data, precedes the volume data. We're able to go ahead and get a front run on the market because everyone in the market is the biggest complete dirtbags you could ever meet, which is why I do this platform, because I don't like them and I like you, right? Good. Okay. So when we went back to basics, right? Like, let's just go back to basics. You know what? Also, I kind of want to sell my Etsy. I think I'm going to. And it's simply just because I don't want to think about it, right? I just don't want to think about it. It's up, I'm profitable. We just got through these last 2 weeks of like hell. Oh, your madre. So let me just get rid of these real quick because I don't want to think about them. I just don't. All right, they were taken. So my account is $20,257, which means over the last 2 weeks, what do? We made $257. But come on, how much fun did we have, right? How much fun did we have over those last 2 weeks making $257, right? So basically, I got paid $257 to have this platform, which is fine. I would have done it for 0. Anyway, now we can breathe. We know we own nothing. There's nothing the market could do to us. Now we can sit back and be like, hey, market, what you got? And let's see what we can do. But before we do that, we must go back to what you always got to do the work, right? So we didn't get lucky. We didn't guys, we didn't just roll dice. We didn't say, oh, you know, when you talk to someone, they're like, why'd you buy the market? Because it's been down too much. That's the dumbest thing I've ever heard. It's been down too much. Okay, so you just think it goes up because it's been down too much. That's your reasoning, right? That person is someone that we call a very silly person. I'm trying to not to curse as much today, although I really, really want to. But how do we do it, right? So we said, okay, price, volume, volatility. 3 components will always give you the right answer. Always. Now, the answer might not be what you want it to be. You may not interpret the answer correctly. First of all, market is always right. Okay, here's another thing I'm going to tell you. If you believe that the market is ever wrong, you are not allowed to be in the market. I am telling you, you're not allowed to. The market is always right. Now, the market you might say was, well, Anthony, you know what? During the financial crisis, the stock market went down all the way, but look at it rebound. Well, what happened during then? Did the banks come in? Did they print a lot of money? Did sentiment change? Did money change? Did bailouts change? Yeah. Well, Anthony, what about COVID? Well, got you on that one. COVID came and, it rebounded. Yeah. The government, you do not bet against the US government, especially when they print money. If the US government says, hey guys, watch this. No matter what COVID does, we got your back. We're going to be in there. We're going to do whatever we need to do. That's all you need to know. Then you just buy. Because for the government to be wrong, the whole country has to go bankrupt, right? Which they're going to. Just not yet, right? All right, so anyway, I'm getting off course, right? So price, volume, volatility. So let's do the homework. So we saw it up here, right? And we see it coming down. Okay, what happened? It's coming down and volume's going up. It's creeping up, right? You see it's a little bit higher, but not a lot. What's volatility doing? Whoa. Volatility's flying higher. It's going up a lot. So price is coming down, volume's going up, but they're not believing it. You see all these people, they're like, yeah, it's going down, but like, I don't really believe it. I'll just keep buying. I'm so smart. The market's wrong. The market's being over exaggerated. Oh, there's the market again. And then and they're not buying. They're not selling, but they're freaking out. So what do you have here? You have people losing money. They're being stubborn and they're freaking out, right? Because look how high the volatility is going. People are rich. And again, the reason I'm able to tell this story is because the volatility index measures the cost of options, the premiums between the puts and calls, and then measures the trend and reports on the volatility of it. Meaning if a put, which means I'm betting that the stock goes down, is $1, and then the next day it's $2, well, that's a market. Now people are willing to pay double for protection. If people are willing to pay double for protection, they're very scared, which means they're volatile. They're acting volatilely. They're paying twice as much for something that they would have got for half as much as the day before. Okay. So when you see that, you see them being stubborn, there's a day coming. I know what stubborn people look like. There is a day coming. Okay. Now, mind you, did we buy any of this? No, we didn't, because that's crazy. There's a day coming. Actually, I think we bought Netflix for like 24 hours. And look what happened. Look at that. That was a day. Look at how big that was. That's a day. Now, if you remember, that was a Monday. I know it's Monday just by looking at it. Because look, it came all the ways down and ended on its highs. It came all the ways down, ended on its highs. Look at that volume. Look at that spike in volume. Look at that spike in volatility. Okay. So what did we say at this point? Oh, all these people, these stubborn people, they finally they said, I can't take it no more. Get me out. And that's the moment we say, yes, got all those suckers out. See you later, guys. Okay, cool. We started buying. But what were we looking for? What do we need to make sure was happening? Okay, well, price stopped going down. We said it cannot get under this line. If it gets under this line, all bets off, right? I'm going to move this up here. So the price is going up, not like a tremendous amount, but what's happening to volume? It's going down, right? And we said, okay, well, when price goes up and volume goes down, that's not really a good sign, yeah? It's not. But there are levels to this. If the volume goes down from a capitulation day, what's the definition of a capitulation day? Where everyone capitulates, where every market participant says, I had enough, get me out. So by definition, volume's always going to come down from that day because that's that day. How do I know it's that day? Do you see this green bar? You see it's a different color than every other one? We already factored that in. We already built the algorithm to show it. This is called a capitulation day. It's called a trend change bar. How do I know it's a trend change bar? Because look, the stock goes down, green happens, and then it goes up. I did a lot of work on this stuff, right? Okay. So it goes up and the volume's coming down. Okay, but is it? Is it really coming down? Because this volume is higher than this volume. It's even about equal to this volume. It's just lower than the capitulation day. All right, so what's happening with volatility? Let's just check. Whoa, volatility is still going up. So price is going up, volume is going down, and volatility is going up. That's not good. That's like all right, Ant, I get you're trying to be optimistic about this, but that, like, by your definition, Ant, that's not good. Okay, fine, you're right, it's not. So what's going to happen? It comes down. Okay. Stocks went down, you were right, it wasn't a good thing. But what happens to volume? It's still coming down. Okay, but volume's coming down from a capitulation day, and you just said it always goes down. Yeah, it did. What's happened to volatility? It's going down. So less people are selling and less people are scared. So what does that tell you? If there's less people selling and less people are scared, and we already had a capitulation day, well, it stands to reason. And the other thing that you don't see in this, well, you do if you know to look for it, is you have shooting points. What do I mean by that? So when any investor, well, professional investor steps into the market, they put their risk reward immediately, right? Like you see us do this. Here's my risk, here's my reward. They do it immediately. And they say, okay, look at this capitulation day. For this truly to be a capitulation day, I know we're going to retest this. And that retest is either going to be successful or unsuccessful. Therefore, I will buy here. But if it gets under this, I'm selling. So I'm putting my sell stop there. Okay. So that person who did that, which is all of these people, went ahead and they were owning. They were not buying and selling. They were owning because they said, as long as this holds, I'm near the bottom. I'm willing to hold, which is why the volume is going down, because there's less transactions. These people are not trading in and out. They're saying, as long as this holds, I'm good. And what they then see is they have a trend line. Sorry. Okay, all right, so let's see this trend line. All right, so it held. Well, look at this trend line. It's, it hits its head here, it hits its head here, it hits its head here. Well, that's not good. If it gets over this line, though, and it holds this line, well, I know that's good. Now, you might say, Ant, that sounds like complete hocus pocus. Like that had nothing to do with anything. You're right. But what is the stock market? If you answer this question, so there's a chance I might kick you out. So, and I can't really, because I don't know how you're answering this out loud, because I can't hear you. But if you answer this question, Anthony, it is a measurement of company value as determined by company fundamentals at every second of every day, you have to leave. Goodbye. That is not the stock market. The stock market is values of companies traded by people's beliefs, what they believe it to be worth, with the strongest opinion being the one that wins. Now, that opinion could be because someone yells fire in a movie theater and everyone runs out when there was no fire and now someone's sitting in the movie theater by themselves. The stock market is individuals trading based on their emotions, on what they believe the best probability outcome to be. Therefore, when you put the stock market in those lights, you know that they're all looking for reference points. I know that this stock is a good stock if it doesn't go under this line, because everyone that knows this stock knows that they should buy it over this line because it's a good stock. And if that ever isn't the case, then everyone's going to sell it. I mean, that sounds crazy, but that's the stock market. That's exactly what the stock market is. So, okay, so it broke out, and all right, so what's going to happen? So here's the reason I sold the Etsy, right? Like, well, I told you why I sold it. But the reason I felt compelled to sell it was that you don't know what the stock market's going to do. Look at all this, right? So all of these people owned it, and then it went down. And now they're getting a little bit of relief. So the belief is that these people are like, oh, please go back up. But you know what? Let me sell a little bit. You just saw me do it. I don't know what's, let me get out. I can get out profitably right now and live to fight another day. I'm cool with that. I got to spend how much time teaching everyone, learning together. And now we have nothing but cash. So tomorrow we could come in and say, kick in the door, wave in the 4-4. See, now I'm talking like Biggie, right? I was talking like Tupac Friday, Biggie today. Obviously something's going on in my life that I'm sitting here rapping, right? Or maybe I'm just fun, right? So we see it going up. So Anthony, enough. Let's see what's going on. Okay. So now stocks are going up, right? Volume is going up there. But we can't see this volume yet because the day's not done, but volatility is going down. Okay. So what can happen? If this volume is higher than this volume by tomorrow, we could continue buying because that's telling you, no, it's all clear. Go, go, go. People are saying they're not feeling volatile anymore. Stocks are going up. More people are buying. That's great. That's Goldilocks. Let's tomorrow buy everything we can. Why not? Here's the problem. If this volume is less than this volume and people are buying and feeling complacent, but there's not as many buyers, that tells you that the people actually don't believe this, that they're just, people are out of the market. They're like, I'm not touching that. See you guys later. It's not till the volume picks up that you can believe it. Think about the volume as a lie detector test. The volume is the stock market's lie detector. Yeah, the price says one thing, the volatility says one thing, but if you don't have people actually doing it, it's like by your deeds you shall know them. So what is our belief? If you put a gun to my head, well, you have Facebook reporting this week, you have Google reporting this week, you have a lot of big tech companies reporting this week. I believe their numbers are going to be stellar. Demand rules you. How much of the market is now directed by AI? 90% of the trading is AI. But again, AI and that it's all rules-based. So there is somebody that's operating the black box. So I think that's a bit misleading. AI just allows people to trade their beliefs as they're happening. So it allows moves to become very volatile, but it doesn't really change the direction, just exacerbates it. But you have a lot of big tech companies reporting this week. So remember what we always said, big money sells when they can sell, not when they want to sell, because it moves the market because their money's too big. So if you have all these tech reporting this week, the belief is, wow, look what Apple did. Look what Microsoft did. Look what IBM did. Now you're going to give me Amazon and Facebook and Google. They're going to do amazing. That's the belief. Meaning if you had big money, you can sell in this market because there's a lot of people that believe it's going to go up. You see, a lot of people are complacent. They're like, okay, cool, get me back in. Oh, we tested this, get me back in. The volume has to confirm it though, because this week could end up being a week where all of the big tech is offloaded to all the suckers, in which case this will go like this and then right back down. You don't want to own that. So because no one has a gun to our head, we don't need to buy something this second, we're not going to. We're not buying anything today. We want to see what this volume is, because we might just buy earnings this week. Why not? I think Facebook reports Wednesday. Who's feeling sexy? Who wants to go buy Facebook calls and sell it Wednesday before they report? I do. If this is higher than this, I think I will. So the market, we're just going to step back. We made money. We made $257. It's a lot of money. But now, mind you, we could have made more than that, right? Like we would have bought Etsy when it was at 20. Like there's mistakes that we made. But I don't know if, for those that understand options well enough, that have been part of this group for a long time, or just understand this stuff, to go ahead and navigate solely based on weekly options in the market that we just had through the last 2 weeks and end up positive is like a really, really big gold star. Do you know hedge funds have lost 20, 30% of their money? And I'm talking like billions. So that's good. So anyway, so let's go ahead and say that we are going to revisit the market tomorrow on what we want to purchase. We sold everything. We're positive. We're good. We're happy. We're feeling sexy. Great. Okay. So if I had to pick my favorite stock for the next 10 years, you guys already know what it is. Well, at least some of you do. It's Facebook. And I think it's called the Meta now. Well, I don't think. I know it's called Meta. All right. So why? Why do I love Facebook? Weekly chart. Okay. You know, let's pull a monthly chart, right? Why not? So this is Facebook. This is Facebook since the beginning. They became public in 2012. I don't know why that's there. Apparently I saw something. Let's just move this stuff. So if we were going to talk about why we like Meta. So fundamentally, so in terms of, do we think that people, what do we think about the people running the company? I think Mark Zuckerberg is one of the smartest people ever. I think he just knows what he's doing. I think he's learned how to play the game as well. I think he knows how to play Congress. I think he's just either a superhero or an evil genius. So you could determine what his motives are, but his success, I think, is without question. And I think he's going to be amazing. I don't agree with all the things he does. I think he's convinced himself that for the greater good, that the ends justify the means. And in doing so, that he could allow misinformation and silence people and prevent stuff from happening to go ahead and justify what he believes the greater good is 50, 100 years from now. So I don't think he's very savvy on the Constitution. I don't think he's a bad person, but I do not think he thinks the things that he does are bad. I think he thinks for the greater good, it's good. That being said, I don't agree with the stuff he does, but if I had to measure the person's heart, I believe that he believes he's doing good stuff. Okay, so I'm happy to own the stock while also criticizing him when I think there's critique to go around. In fact, some of you have known me to say some very, very sharp, pointed things because I believe what he's doing is not right in terms of silencing certain people. But I do also believe it offers an opportunity which RHINO has stepped up on, and that's a story for another day. Anyone that knows RHINO, join our 2 o'clock meetings with V, they're amazing. Okay. But so if I believe he's going to be successful, great, I want to own the company. But he's pioneering stuff, right? So he's pioneering virtual reality, which he did with Oculus. If you remember, he bought the headset in like 2014. No one knew why. And now Oculus, you can put the thing on and you could literally have sex with someone from another part of the country because you could both buy this hardware that you put in or around your genitals that actually is connected to the Oculus. And when something happens, you could feel the touch, right? Like, that's not the selling point of it, but he's able to do that. He created that. That's now possible. And the fact that you may not know about it, it's a good thing. It means you have a good life. It means you don't need to do that, right? Okay. But if you say you could do that, well, then how many other things can you do? And then, so that's going to go even further. In fact, he's pioneering creating this hardware that you can put on like your wrist that actually will be able to send rays or signals through your body that will allow it to feel pressure. So for instance, say you're sword fighting and someone hits you in the arm. Well, you only have these goggles on, but these sensors will send a particular signal to just that part of the arm where you'll feel it. So you're able to sword fight with just goggles on. That's not today. That's probably 5 years out. But if you're able to do that, well, what else can you do, right? Like that technology is worth a lot. Like you could change the world, and that's what he's trying to do. That's virtual reality. What he's working on also is augmented reality, where you have the glasses that are able to superimpose a projection in front of you that you're able to see the world, right? So you might be able to one day wear glasses that show you, oh, this person walking by is this person walking by is this building's this is where the heat sensor, like just really, really cool stuff. Or you could be with your best friend, right? Like, or your girlfriend, she's in Thailand over the weekend doing business. Well, if your girlfriend's doing business in Thailand, you probably shouldn't date her, right? Your girlfriend's doing business in the UK over the week. Sorry, my apologies to anyone in Thailand, but they have a couple of things that they do. Your girlfriend's in UK over the weekend, right? And you want to be with her. You want to go walk to the park. You both put your glasses on and you could look at each other. You could touch each other. You could hold hands. You could be holding hands and walking with a hologram. I know this sounds really trippy, but this is what they're doing right now. This is in their lab. Meta, the name of the company, stands for the metaverse. Their goal is to create an alternate universe on top of our universe as we see it. That the metaverse could be bigger than the universe because you could put these goggles on and you could automatically be in Mars. You could feel the heat. You could see the people that are already there because they're there, right? That all starts with community. Like we've always said, population rules. You need to have population. Well, does anyone have more control over population than Facebook? They have how many people on WhatsApp? They have how many people on Facebook? They have how many people on Instagram? They have how many people on all of these different platforms? Well, when you go ahead and say that you have all these people and you at least have their attention, and it's the population that's going to be able to create the thing going forward, could you create your own currency? Could Facebook create a Facebook coin and say only if you're on our platform are you able to, it's the only coin that's accepted on our platform, therefore the whole world has to buy it. What's the value of that coin overnight? Can Facebook go ahead and say, you know what, we're going to do healthcare. We have everyone's data, and if you want to receive our Facebook coin, you have to submit your healthcare information, and we're going to take over healthcare. There is nothing you can't do if you have the population. And if you can dream and inspire the population, there's nothing they won't do to stick with you because you're inspiring. We believe Facebook checks all those boxes. The thing that scares people about Facebook is that they're a monopoly. The government likes using them as a punching bag. We agree. We think that's not good. We think Mark Zuckerberg is so fantastic, though, that unless you can take his brain and slice it up into different components, it doesn't matter. He will always be a monopoly. He is the monopoly. Like RHINO. RHINO is Anthony. You can take all of my companies, throw them anywhere you want, but I'm me. And unless you slice me up, I'm me. That being said, let's say the government says, okay, you know what? Listen, Mark, you own a monopoly and you got to divvy these companies up. So you have to spin off Instagram into their own company. You cannot own both anymore. Instagram will be its own company. And this stuff happens, right? This has happened many times. And WhatsApp, you got to spin it off. You can't have that. And this virtual reality thing, Oculus, that's got to be a different company. And this Facebook thing, you want to own Facebook, cool. You now have to make 4 or 5 different companies because your companies are too big. They can't compete. Other companies can't compete with you. You have to split them up. Okay. Mark's like, oh, darn, I really don't want to do that. Okay, fine. We have to split it up. So Facebook stock right now is $307. Let's call it $300 between friends. What do you think would be worth more money? One share of Facebook at $300 or, and one share of Facebook at $300 and that share of Facebook owns Oculus and Instagram and WhatsApp and Facebook and the metaverse, right? It owns those 5 things. Or one share of the metaverse, one share of Facebook, one share of Oculus, one share of Instagram, one share of WhatsApp. Now they're 5 separate companies, one share of each. Which do you think would be worth more? The one share of each would be worth so much more because now each one of those companies is reporting their own numbers. They get their own earnings multiple. They get their own investors. They get their own analysts. They get their own projections. Each one of them is able to grow as big as they can become because they're no longer held hostage to the ceiling of one roof, Facebook. Meaning, if the thing that people are afraid of is actually the best thing that could ever happen to this stock. Because if they ever announce that they have to split this company up, this $300 will be $500 overnight. And I don't even need to stop myself when I'm saying that because it would be. Meaning, you think Mark doesn't know that? So he plays the Congress game. Oh no, you can't split us up. And of course he likes his team. He wants everyone under one roof. But he's not stupid. He knows one day he's going to have to split this up. He knows that if he wants, but he's using it as a chip. He knows that if he wants to go ahead and accomplish the things that he wants to do, which is quasi like take over the world, he's not going to be able to do that unless he has something to bargain with. Okay, guys, fine. I'll make them all separate companies. You're anti-monopoly, whatever nonsense. Cool. But I'm going for this. I'll split it up any way you want. Do you know what happened to Mark Zuckerberg's net worth that day? Do you know what happened to every network that ever owned Facebook that day? The point of what I'm saying about Facebook is I think you can own it right now for the next 20, 30 years, and you could easily average 30, 40% gains over that time frame. Now, there might be some years it's down, like I don't know, maybe something happens, but over that time frame, because the thing that they have that you cannot just invent is population. And I believe Mark is smart enough to know the value of that. And I don't think he would ever just allow it to go away. Now, some people that are very in tune with our RHINO platform know that that's our goal. We're creating a RHINO search engine. In fact, it's being created right now. And what's going to allow it to become popular is that there is no small business search engine. There's only the Googles and everything of the world, which aren't designed to be big business search engines, but they're designed to make profit. Therefore, they only go ahead and offer the results of those companies that are most profitable to them. We believe that that goes ahead and ostracizes 99% of the population because Lou's hardware will never get seen on that. So what if there's a platform that Lou's hardware could be seen on? Well, people would have to go to it, right? Well, if people knowingly were able to have the decision between two options, if I want to go ahead and support a big business, I could go on Wall Street search engines. Or if I want to support small business, I could go on RHINO Street search engine. I believe it is that moment we're looking for, that somebody could say 50-50, what do I want to do? And in that moment, it allows us to be as big as those search engines are, right? So that's what RHINO is doing. And it's happening. It's happening right now. I think we have a $100,000 investment coming in today. So things are happening. But Facebook will never run into that problem. We can't create another Facebook. We can create another search engine because people are searching a search engine for the results that are given by the search engine. They're going on to it with the notion of what they want to look for. Facebook, it is what it is. Like, you can't create another Facebook. They have such a moat around them. Therefore, Facebook is our favorite stock. And if I had a 5-stock portfolio, Facebook will be one of them. Now Etsy's 153, so obviously we sold it too soon. Whatever, we'll take our profits and come back tomorrow. So what we're going to do between now and tomorrow, we're going to introduce another thing tomorrow, number 2 of our 5. We're going to take a look at what the market did today because it is very important. You have a very strong NASDAQ day. If this NASDAQ day gives it all up, you got a problem. If it continues running all day, now it's a short squeeze. Like, there's so much that's happening today that it would be actually irresponsible. Now, I can't say you'd be irresponsible because you don't know enough to know how irresponsible you'd be acting. But if somebody buys something today, you're gambling. And whether you believe me or not, that's my opinion. So we will take a look at this tomorrow. We'll take a look at the super duper list. We'll see what stocks still have a 10 or 12 or 15. If there's any 20 red and greens out there, we're going to do that tomorrow, plus the new stock and plus some commentary on what happens today. Guys, I know that I receive emails from all of you, right? I know how much money everyone's made. In fact, I've seen people actually donate to RHINO charity because of how much money they made. I love it. Thank you. Keep going. Don't get omnipotent. Don't get too cool for school. Stay the course. We're not going to be cowboys. You know what? I'll tell you something. Last Friday, when we bought Apple, and it was up 20% an hour later, I wanted to sell it. But I said, you know what? I don't want to go ahead and teach that. I don't want to teach that you can make money within a half hour because I don't want to get people so drawn to that. And because so, I ended up taking a big loss on it. The point of what I'm saying is, I know there are people that made a lot of money. I know I could have even made a lot of money. But there is a certain responsibility that goes with this because if you do not have good practices, you will get annihilated. So that is my warning for the day. I really, really want to run to the bathroom. I have an 11 to 12 o'clock and then I have to be home by 12. So I'm going to take it in my car. Deborah, I love you. And Celebration, Florida. I love all of you. And guys, let's have more fun tomorrow. Bye.